Alright, so I had a comment on my last video asking how I actually do my macro research and whether I have some kind of checklist that I follow before taking a trade. So in this video, I'm going to walk you through exactly how I frame my trades using macro, how I interpret economic data, and how I combine it with market structure, and give you my exact checklist I use before entering anything. I want to keep this as simple and digestible as possible, and I'll show you how I apply this to the actual gold trade that I'm in currently. So before I even touch macro, before I even open Forex Factory, before I care about news, I always start with one thing. What is the chart telling me? The chart is my baseline. If the structure doesn't support the trade idea, I don't care what the macro says. So let me show you exactly how I do it. The first thing I notice is my swing highs and swing lows. So down here being our swing protected low, as we saw reactions off this, and a build up and continuation to the upside, and a break of structure from the left here, indicating that we are going to go bullish. Once we did this, we created a higher high, a higher low, and a higher high. So as you can see very clearly, even a beginner could tell we are in bullish market structure. Now there's a whole whack of ways you can do this. I like doing this on the 1 hour, even the 4 hour, just looking at my levels and understanding, are we still bullish or have we flipped to bearish? So in this case, we are still bullish. And with this trade in particular, you guys know, actually, if you haven't even watched that video, I would go watch that video first, me breaking down my gold trade. We took around $4,000 in profit right here, and we are letting another $4,000 ride of this trade back to the all-time highs. This did get a little bit dicey. As you can see, we almost came and broke even. But I digress, we continue to the upside. So we had a couple areas of interest right here. I wanted to take the trade right here off the 50% of this area of interest that I had marked out, but I waited for more levels of confirmation, which I already spoke about before entering the trade. Now, with the market showing me that we are bullish, the market structure says, hey, we're looking to go long, everything is pointing in the long direction. And even if I was looking at that around here, where I would have done my macro bias, I would have said, cool, I can see where I would probably want to take an entry off of. I can see that we are bullish. I can see everything lining up on the charts the way I like it. Let's go confirm this with my macro bias. And the easiest way to do this is simply just using forexfactory.com. It is probably the easiest, most straightforward thing you could ever use as a trader. It does everything so simple. It shows you the actual results of the news coming out, the forecast, and the previous values. Obviously, this highlights what the market actually cares about, red being the most important, orange being, yeah, we still care about this, yellow being is probably not going to move the market that much. There's no magic here. Forex Factory is just a simple tool to understand what information the market is reading to this week. So nothing simple to this. Like I said, I have this filtered for all event types, all folders, just for the US dollar for the sake of this example. If you are trading a different currency or anything associated with something else, you can actually just filter that and toggle that on and off. And I have it set to the current week. I like to get a bird's eye view of what I'm looking out for the week, instead of just kind of looking day by day. Like I said, red obviously signals the high impact, orange is medium impact, yellow is low impact. These are the events that actually move gold, indices, everything. So the first thing you're going to do is look at the forecast versus previous values. This is telling you what the market is expecting. If the forecast is worse than the previous, the market may already be pricing in the weakness. If the forecast is better, the market may be expecting strength. Now, the actual number is what sets the direction. When the actual number comes in above or below, that's when the real volatility comes in. The fun part is when obviously we jumped and combined this all on the chart. The easiest thing you can do if you're a new trader is click this little detail right here. This expands and tells you exactly what this is, the frequency of it, why traders care about this, and this is exactly the bread and butter you need to actually identify macro properly. In this case, using ISM manufacturing PMI. How often does this happen? This is released monthly on the first business day after the month ends. When will the next release be? January 2nd. Mark it in your calendars. Why do traders care? It's a leading indicator of economic health. Businesses react quickly to market decisions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Very straightforward. You can do that for every single thing on here. Nothing special. You're going to review and assess everything going on, how that's affected in the world currently, and that's how you're going to start with the macro bias. So once I have the technical bias and the key events for the week, the forecast, and the previous numbers, now I can start building that real bias. So step one, identify the big events. So this week is going to be ISM manufacturing PMI, ADP non-farm employment change, ISM services PMI, unemployment claims, a big one for me, and one of the biggest ones, core PCE. There's also a couple of Fed speeches and political shifts, any rate-related comments also to take in. These are all going to decide whether the US dollar strengthens or weakens, and that directly controls gold. Next step is going to compare the forecast to the overall economy, and this is the part that most traders ignore. For example, if the economy is already slowing like it is right now, and the forecasts show more slowing, that naturally shifts bias toward gold strength. If inflation is sticky and forecasts show rising prices, that creates uncertainty. also good for gold. Now, to build your weekly macro narrative, there is one simple question that I always ask. Is this week supporting gold strength or gold weakness? And once I know this narrative, I go back to the chart and I ask, does this structure actually agree? So for the sake of this example, let's apply this actual macro release schedule to the current chart that we have going on right now. So first of all, with ISM manufacturing, it is signaling a contraction being under 50. That signals the US dollar is weak, which means gold is strong. As you can see, the actual value came in lower than the forecast. No good. Only good for our gold trade. The next thing would be Powell speaking. The cautions or cuts would equal more gold benefits. Next, we have ADP non-farm employment change, which came in at minus 32,000. That's in the negative, which signals a weak labor, which means rate cuts and gold is more bullish. Next is ISM services PMI, which actually came in above the expected forecast right here. Kind of a little bit of a mixed opinion with the rest of what's coming in right now. I would say this is more of a mixed economy, and in the confusion, gold will thrive with this. And then some of the biggest things that haven't been released yet being unemployment claims. If unemployment claims are rising, that does signal a US dollar weakening, which makes gold stronger. And lastly, core PCE, and if that comes in soft, gold will pump. If it comes in hot, I do think there will be a short dip, but larger macro still supports the upward bias from everything else we have going on here. I also like to frame a couple other things going on in the world right now. I'm tapped in on Twitter. I'm constantly reading the markets. You can easily use anything from Yahoo Finance. You can use basically any kind of platform you want to that talks about the market, what's going on a daily basis, and just encompasses everything, because those catalysts are also very, very strong and can help frame more context around your trades and your trade's direction. This is naturally just a full-time job as a trader. If you're trading macro, you are constantly glued to your phone, understanding what the stock market is doing, what the overall markets are doing, how the world is moving as a whole. Like one political catalyst we have this week is Trump's newborn $1,000 savings policy. This signals future fiscal expansion, bigger deficits, increased inflation expectations, and more uncertainty. All of this would make gold attractive in my eyes. So what does all this data from this week tell us? The US dollar is kind of slowing. It's mostly mixed, uncertain, politically noisy, and possibly heading into more spending. And gold loves this environment. So a overall checklist of this would be the following. 1. What is the high time frame structure? Bullish or bearish? Number 2, is the US economy accelerating or slowing? Right now, it seems that we are slowing, which means gold will be bullish. Number 3, what is inflation doing? If it's cooling, that means rate cuts and gold is bullish. If it's sticky, that means uncertainty, which also could support gold. Number 4, what is the Fed's tone? If the Fed's tone is dovish on rates, gold is stronger. Hawkish, gold dips but doesn't die. And in this case, we are looking at a rate cut in December, signaling that gold would be very strong. 5. What are the key events this week? That could be CPI, PCE, NFP, ISM, Powell speaking. But this week we have ISM, ADP, ISM again, and core PCE. What are all those pointing at? That looks like we could be more bullish on gold. Number 6. Is the macro narrative clear? This is where everyone will go wrong with this, because this is such a skewed point of which discretion comes in for traders. If yes, you can trade it. If no, you wait. You can easily get caught up with the advertising of gold and how easy it is to jump into these massive giant move trades here, and this is where the greed will come in. So I will say I need you guys to hold some sort of restraint when looking at your macro bias. Don't bend your macro bias to make it fit your market structure plan. And finally, number 7, does your macro agree with your market structure? If your macro bias is bullish and your market structure is bullish, you are free to take the trade. If one does not match with the other, do not take the trade. I don't know why that is so hard for some people. If one does not line up with the other, there is no reason you should be risking capital in the markets. Once I have both structure and macro aligned, here's how I actually enter. Some kind of catalyst hits, gold spikes, I wait for a pullback. I either enter on my area of interest or a breakout model of a continuation. So in this case, like I said, I hopped down to the 30-minute time frame and actually show you guys. We broke through this area of interest right here with very low volume. That's not something that I like. There was some catalyst that went on during this Asia session that had a massive push through this area of interest again, which I said, you know what, now there's the volume we're looking for to get involved in this position, and I took it right off the retest right here. Yes, I know that is a little bit dicey with how close we got to SL, but we survived it and the macro bias was strong enough to carry us to our first take profit level. So this is exactly how I build my macro bias. Structure first, macro second, narrative third, execution last. This is how you stop guessing and start trading with actual conviction. If you guys want a weekly version of this every Sunday, let me know. I think that would be really interesting once we have a good following going, and you guys will be able to understand exactly what I'm looking at ahead of each week, and maybe we get some more macro traders. Just want to say I am so thankful for the first 100 subscribers that we have. You guys are all so amazing, and I love all the feedback that you guys have been giving me. I can't wait to continue doing this and helping you guys learn more and more about macro and market structure. But for the time being, that's going to be it for this video. If you learned something, make sure to leave a like, subscribe, and a comment on anything you'd like to see or just something you want me to talk about. We'll see you in the next one.